Before we begin, a quick disclaimer. I am not a lawyer, insurance agent, or financial advisor. This video is for informational and educational purposes only and should not be considered legal or financial advice. The world of insurance is complex and laws vary significantly by state and over time. Always consult with a qualified professional for advice tailored to your specific situation. Imagine this. You're stopped at a red light, singing along to the radio, thinking about what's for dinner. Suddenly, you hear the screech of tires and an earth-shattering crunch. You're jolted forward. Your neck snaps back. Your car is wrecked. The driver behind you, who is clearly texting, just plowed into your bumper. It is, without a shadow of a doubt, 100% their fault. So, after the shock wears off, you do what you think you're supposed to do. You exchange information, you call your insurance company, and you expect the at-fault driver's policy to cover your medical bills, your lost wages from missing work, and your pain. But then you get a call from your agent, and they say something that makes no sense at all. You'll need to file a claim under your own policy for your injuries. You're confused, angry. How is this possible? The other guy was at fault. Why should your insurance have to pay? Why should your rates potentially go up because of someone else's mistake? Welcome to the bizarre, counterintuitive, and absolutely critical to understand world of no-fault auto insurance. If that scenario sounds like a nightmare, you need to pay close attention. Because for millions of drivers in a dozen states across the US, this isn't a hypothetical. It's the law. It's a system that fundamentally changes the rules of the road after an accident, and not understanding it can lead to financial disaster, delayed medical care, and immense frustration. But here's the good news. This system, while confusing on the surface, can be understood. And in this video, we are going to pull back the curtain and demystify it completely. We will break down exactly what no-fault insurance is, how it works, why it exists, and most importantly, what it means for you, your wallet, and your rights as a driver. By the end of this, you won't just understand the jargon. You'll be empowered to navigate an accident with confidence, knowing exactly what to expect. We're going to turn confusion into clarity. So let's start with the absolute basics. What does no-fault actually mean? The name itself is a bit of a misnomer. It's confusing. No fault does not mean that no one is ever at fault for an accident. In every car crash, someone is still determined to be legally responsible. The police report will still say who ran the red light or who was speeding. If you cause an accident, it can still go on your driving record and affect your insurance rates. The concept of fault still very much exists. So what does it mean? In a no-fault system, the term no-fault refers specifically to how injuries are paid for, right after the accident. The core principle is this. Regardless of who caused the crash, your own auto insurance policy is the primary source of payment for your medical bills, and in many cases, lost wages up to a certain limit. Let me say that again because it's the most important sentence you'll hear today. In a no-fault state, your own car insurance pays for your own injuries first, no matter who is at fault. You hit someone? Your insurance pays for your injuries. Someone hits you? Your insurance still pays for your injuries. It's a system designed to get money into the hands of injured people quickly, without having to go through a long, drawn-out process of proving who is at fault in court. The key component that makes this all work is a specific type of coverage that is mandatory in these states. You've probably seen it on your insurance declaration page and wondered what it was. It's called Personal Injury Protection, or more commonly, PIP. Think of PIP as a sort of health insurance that's attached to your car insurance policy. When you're injured in an auto accident, you turn to your PIP coverage first. It helps pay for things like hospital bills, doctor's visits, physical therapy, and even a portion of your lost income if you can't work. It covers you, any relatives living in your household, and any passengers in your car who don't have their own PIP coverage. This is fundamentally different from the system that most Americans are familiar with, which is called an at-fault or tort system. In an at-fault state like California or Texas, the process is exactly what you'd intuitively expect. The person who caused the accident is responsible, or liable, for all the damages. Their bodily injury liability coverage pays for the other driver's medical bills, and their property damage liability coverage pays to fix the other driver's car. It's a simple concept. You break it, you buy it. Because the injury, your insurance pays for it. In that system, if someone rear-ends you, you file a claim against their insurance. You fight with their adjuster. You wait for their company to accept liability before they cut you a check. This can take weeks, months, or even years if there's a dispute over who was at fault. And that delay is precisely why no-fault systems were created in the first place. Back in the 1960s and 70s, lawmakers saw a huge problem. People injured in car accidents were having to wait forever to get their medical bills paid. They were stuck in legal battles, unable to work, and falling into debt while insurance companies and lawyers argued over who was to blame for a fender bender. The courts were clogged with minor injury lawsuits. The solution they came up with was no-fault insurance. The grand idea was to streamline the process. Let's have each person's own insurance handle their own minor injuries immediately. This gets money flowing to doctors and hospitals right away. Keeps people out of financial trouble. And in theory, it reduces the number of small lawsuits, which should lower insurance costs for everyone. It was a trade-off. In exchange for this speedy, guaranteed payment for your injuries from your own insurer, you give up some of your rights to sue the at-fault driver. That's the other side of the no-fault coin, and it's a big one. In a traditional at-fault state, you can sue the other driver for any injury, any medical bill, and for non-economic damages like pain and suffering. In a no-fault state, your right to sue is restricted. You generally cannot sue the at-fault driver for your injuries, unless those injuries are considered serious enough to meet a certain threshold. This threshold is the gatekeeper. It's what separates a minor injury from a major one in the eyes of the law. Every no-fault state has a different definition of this threshold. It could be a verbal threshold, where the injury has to fit a description, like a permanent disfigurement or a fracture. Or it could be a monetary threshold, where your medical expenses have to exceed a certain dollar amount, say $5,000, before you're allowed to step outside the no-fault system and file a lawsuit against the person who hit you. So let's put it all together. A no-fault system is a package deal. On one hand, you get quick payment for your medical bills and lost wages from your own insurance policy through your PIP coverage, regardless of fault. On the other hand, you give up your right to sue the at-fault driver unless your injuries are severe enough to cross a specific legal threshold. This system directly impacts drivers in Florida, Hawaii, Kansas, Kentucky, Massachusetts, Michigan, Minnesota, New Jersey, New York, North Dakota, Pennsylvania, and Utah. Puerto Rico also uses a no-fault system. And even if you don't live in one of these states, you could easily find yourself in an accident while driving through one, suddenly subject to a completely different set of rules. Understanding this framework is the first, most crucial step. It's the foundation for everything else we're going to cover. Because once you grasp this core concept that your own insurance pays first, and your right to sue is limited, you can begin to understand how to protect yourself. You can start asking the right questions about your own policy. How much PIP coverage do I have? Is it enough? What is the lawsuit threshold in my state? These are the questions that can make the difference between a minor inconvenience and a life-altering financial crisis after an accident. To understand why these questions are so critical, let me tell you a story. It's about a guy named Mark, a 35-year-old contractor living in a no-fault state. Mark considered himself a safe driver. He paid his insurance on time, had a clean record, and carried the legally required minimum amount of PIP coverage, which in his state was $10,000. He figured, it's the law, so it must be enough. That single assumption would nearly ruin him. One Tuesday afternoon, Mark was stopped at a red light when a distracted driver in a big SUV slammed into the back of his pickup truck. The crash was jarring, but nobody seemed seriously hurt. They exchanged information. The police wrote a report clearly stating the other driver was at fault, and Mark drove his dented truck home, feeling sore but mostly just annoyed. The next morning, he couldn't get out of bed. A searing pain shot down his neck and into his shoulder. The doctor at the urgent care clinic suspected a herniated disc and sent him for an MRI. And this is where the no-fault system kicked in just like it was supposed to. The ambulance ride, the ER visit, the MRI, the prescription painkillers, it was all paid for by Mark's own PIP coverage. He didn't have to deal with the other driver's insurance company. He didn't have to prove fault. It was fast. It was efficient. For a moment, Mark thought, wow, this system actually works. But the $10,000 started to disappear. Fast. The MRI alone was nearly $3,000. A few sessions of physical therapy, a visit to a specialist, and suddenly he got a letter. His PIP benefits were exhausted. All $10,000 were gone. The problem was Mark wasn't getting better. He still couldn't lift his tools, which meant he couldn't work. His doctor recommended more physical therapy and possibly surgery. The bills for that would now be on him. So Mark did what any of us would do. He called a lawyer. He said, the other guy was 100% at fault. He was texting and driving. Let's sue him. His insurance should pay for my lost wages and my future medical care. And they should pay for all this pain and suffering." The lawyer listened patiently and then delivered the devastating news. "Mark," he said, "I'm sorry, but you can't sue." Mark was stunned. "What do you mean I can't sue? He hit me." The lawyer then explained the second, brutal half of the no-fault bargain. The lawsuit threshold. In Mark's state, they had what's called a verbal threshold. This means you can only sue the at-fault driver if your injuries meet a certain descriptive standard, like permanent loss of a bodily function, significant disfigurement, or death. A herniated disc, as painful and debilitating as it was for Mark, didn't automatically qualify. The other driver's insurance company would argue it wasn't a permanent or significant injury. They would hire their own doctors to examine him and say he just had a minor sprain. It would be a long, expensive court battle he was not guaranteed to win. Mark was trapped in the no-fault nightmare. His own PIP was gone. His health insurance would cover some medical costs, but he had a huge deductible and copays he couldn't afford without a paycheck. And because of the lawsuit threshold, he was barred from holding the at-fault driver financially responsible for the chaos they had caused in his life. He was left with mounting debt, chronic pain, and no way to earn a living. Mark's story is a terrifying example of how the no-fault system, designed to protect you, can fail you if you don't understand its two most important components: your PIP limit and your state's lawsuit threshold. Let's break down that threshold first, because it's the gatekeeper that determines your right to sue. There are generally two types. The first is a monetary threshold. This is more straightforward. It means you can sue for pain and suffering if your medical expenses exceed a certain dollar amount. For example, $2,000 or $5,000. If your medical bills hit that number, the gate opens and you're allowed to file a lawsuit against the at-fault driver. It's a clear black and white line. The second and far more common type is the verbal threshold that trapped Mark. This is where the gate is locked, and the key is a specific legal description of your injury. These descriptions often include phrases like serious impairment of a body function or permanent serious disfigurement. The problem is, what does serious or significant actually mean? It's incredibly subjective. It's a gray area, and it's in that gray area where insurance companies live. They will fight tooth and nail, arguing your injury doesn't meet that verbal definition, leaving you in legal limbo. So the very first thing you need to do right now is find out which type of threshold your state has. Is it a dollar amount or a descriptive phrase? Knowing this will fundamentally change how you approach your insurance. Now let's talk about the other piece of the puzzle: PIP coverage. Mark made the classic mistake of assuming the state-mandated minimum was enough. Here's the dirty secret. Many of these minimums were set years, even decades ago. A $10,000 limit might have been reasonable in 1985, but in the 21st century, with the astronomical cost of healthcare, it's practically nothing. It can be wiped out by a single trip to the emergency room. Your PIP coverage is your financial life raft after an accident. It's not just for medical bills. Depending on your state and policy, PIP can also cover a significant portion of your lost wages if you can't work. It can cover the cost of replacement services, things like hiring someone to clean your house, care for your children, or even mow your lawn if your injuries prevent you from doing it yourself. It can also cover funeral expenses. It is your first and primary line of defense. Relying on the state minimum is like going into a sword fight with a butter knife. You are setting yourself up for failure. So how much PIP should you have? While it varies for everyone, a good starting point is to look at your own health insurance policy. What is your annual deductible? What is your out-of-pocket maximum? If your out-of-pocket max is, say, $6,000, you need at least enough PIP to cover that, because you'll have to pay it before your health insurance takes over fully. But you also have to account for lost wages. How much money would you lose if you were out of work for a month? 2 months? 6 months? Your PIP coverage needs to be robust enough to fill that gap. For many people, this means carrying $50,000, $100,000, or even $250,000 in PIP coverage. And I know what you're thinking. That must be incredibly expensive. You'd be shocked at how cheap it is to increase your coverage. The difference between a disastrously low $10,000 policy and a truly protective $100,000 policy might only be a few dollars a month. It is, without a doubt, the single best investment you can make in your auto insurance policy. Let's quickly rewind Mark's story, but with one change. Let's imagine a driver named Sarah. Same accident, same car, same at-fault driver, same herniated disc. But Sarah, after doing her research, had opted for $100,000 in PIP coverage. For Sarah, the experience is completely different. Her medical bills, from the ER visit to the MRI to months of physical therapy, are all covered. When her doctor recommends a specialist, she doesn't have to check her bank account first. She just goes. Her policy also covers 80% of her lost wages. So while she's recovering, the mortgage still gets paid. The lights stay on. The financial stress, which so often makes recovery even harder, is simply gone. She can focus on one thing: getting better. Because she had the right coverage, the no-fault system worked for her exactly as intended. It provided a safety net that allowed her to recover without financial ruin. The difference between Mark's nightmare and Sarah's peace of mind wasn't luck. It was a single choice made months before the accident, a choice to invest a few extra dollars for a massive amount of protection. Understanding your lawsuit threshold and dramatically increasing your PIP coverage are the two most powerful moves you can make to protect yourself in a no-fault state. They transform your insurance from a piece of paper that makes you legal into a financial fortress that can withstand a real-life crisis. So you might be thinking, okay, I get it. I'll max out my PIP and I'll be safe like Sarah. But what about the person who hit you? Does their insurance just get off scot-free? If your insurance pays for everything, does the at-fault driver face any financial consequences at all? The answer is a complicated no. And it involves a hidden legal process that can come back to bite you if you're not careful. It's a process where your insurance company and their insurance company fight a secret war over the money that was paid out for your injuries, a war that you might not even know is happening. It's called subrogation, and understanding how it works is the next critical piece of the no-fault puzzle. It's called subrogation, and understanding how it works is the next critical piece of the no-fault puzzle. Think of subrogation as a behind-the-scenes financial battle. After your insurance company pays for your medical bills and lost wages under your PIP coverage, they don't just absorb that cost and move on. No, they turn around and look at the person who actually caused the accident. They essentially step into your shoes and say, hey, our client didn't cause this mess, your client did. You need to pay us back for the money we spent. This is the core of subrogation. The right of your insurer to recover the money they paid you from the at-fault party's insurance company. It's a transfer of rights. You had the right to demand that money, but since your insurer paid you, they now inherit that right. Let's go back to our example. You're Sarah sitting at a red light and Mike rear-ends you. You live in a no-fault state. You file a claim with your own insurer, Good Hands Insurance. They act fast, paying out $15,000 for your hospital visit, physical therapy, and the wages you lost while recovering. For you, the no-fault system worked. It was quick and it was relatively painless. But for Good Hands Insurance, the story is just beginning. Behind the curtain, a claims adjuster at Good Hands is now assembling a file. They have the police report that clearly states Mike was at fault. They have every single medical bill they paid on your behalf. They have proof of the lost wages they covered. They bundle all this evidence together into what's called a subrogation demand package. This package is the first shot fired in this secret war. They send it directly to Mike's insurance company, Apex Assurance. The demand letter essentially says, our investigation shows your driver Mike was 100% at fault for this accident. As a result, we paid our insured Sarah $15,000 under her personal injury protection coverage. Here is the proof. We demand you reimburse us for the full amount. Now, you might think this is an open and shut case. Mike was clearly at fault, but Apex Assurance isn't just going to write a check. Their job is to protect their own financial interests. So they'll scrutinize everything. They might push back. They could argue something called comparative negligence. Maybe they'll claim, well, the police report says Sarah's brake lights were dirty, which could have contributed to the accident. We believe she was 10% at fault. If they can prove that, they might only have to pay 90% of the claim, saving themselves $1,500. This back-and-forth negotiation can go on for weeks, even months, all completely invisible to you. The two insurance giants are wrestling over the money, and you're just living your life, thinking the case is closed. So, why should you even care about this corporate clash? Who cares if your insurance company gets its money back? Well, you should care for two very important wallet-impacting reasons. First, and most directly, your deductible. If you had to pay a deductible for your PIP claim or for the collision damage to your car, a successful subrogation claim is your golden ticket to getting that money back. When your insurance company recovers the full amount from the other insurer, they are legally obligated in most states to refund your deductible to you. So if Good Hands Insurance successfully gets the full $15,000 from Apex Assurance, they will also recover the $500 deductible you paid for your car repairs and send you a check. Many people just assume that deductible is gone forever after an accident. It's not. It's just waiting on the outcome of a battle you didn't even know was being fought. The second reason is much bigger and affects every driver on the road: your insurance premiums. Insurance is a business of risk and numbers. Every dollar an insurance company pays out is a loss on their books. To cover these losses and make a profit, they charge us premiums. When insurers are successful at subrogation, they recover billions of dollars in losses each year. This recovered money goes back into their pool of funds, which means they don't have to pass those losses on to all of their customers in the form of higher rates. So, in a way, every successful subrogation claim helps keep your future insurance bills just a little bit lower. It's a crucial mechanism that helps stabilize the entire insurance market. But this process isn't always straightforward. What happens if Mike, the at-fault driver, didn't have insurance? This is a nightmare scenario. Your insurance company can't subrogate against an insurer that doesn't exist. They could technically try to sue Mike personally to get the money back, but let's be realistic. If someone is driving without insurance, the odds of them having $15,000 in assets just lying around are incredibly slim. In most cases like this, the subrogation process hits a dead end, and your insurer has to absorb the loss. This is a powerful argument for having uninsured motorist coverage, which we'll cover later in this series. There's another major twist, and it gets to the very heart of why no-fault was created. In some of the purest no-fault states, like Michigan or Florida, the laws severely limit or even completely eliminate an insurance company's right to subrogate against another auto insurer for PIP benefits. The logic is this. The whole point of no-fault was to reduce lawsuits and costly legal battles between insurance companies. If both Sarah's and Mike's insurers are just going to fight it out anyway through subrogation, what's the point? So, in these states, the law basically says that each insurance company is responsible for its own customers' injuries, regardless of fault, and that's the end of it. Good Hands Insurance pays for Sarah's injuries. Apex Assurance would pay for Mike's if he were injured, and they can't sue each other to get the money back. This contains costs and litigation, but it also means your insurer has less chance of recovering their money, which can put upward pressure on premiums in those states. Now, it's critical to understand the difference between subrogation and something else that sounds similar: reimbursement. They are two sides of the same coin, and confusing them can cost you dearly. Subrogation is your insurer's right to go after the at-fault party's insurer. Reimbursement is your insurer's right to get paid back out of your settlement. Let's imagine your injuries were serious. That $15,000 from PIP wasn't nearly enough. You've met your state's threshold to step outside the no-fault system and sue Mike directly for your pain and suffering. Let's say you win a settlement of $100,000 from Mike's insurer, Apex Assurance. Your insurer, Good Hands, sees this. They come to you and say, "Congratulations on your settlement. By the way, remember that $15,000 we paid for your medical bills up front? We need that back now." This is reimbursement. They are claiming a right to be reimbursed from your settlement money for the costs they initially covered. Suddenly, your $100,000 settlement becomes an $85,000 settlement. This can feel like a punch to the gut. You thought that money was for your pain and suffering, but your own insurance company is taking a piece of it. This is why reading your policy is so important. The right to recovery, or reimbursement clause, is buried in the fine print of most insurance contracts. Whether they can actually do this and how much they can take varies wildly by state law. Some states have anti-subrogation rules to protect consumers in these situations, while others give the insurance companies a lot of power. It's a complex legal area where having a good personal injury attorney becomes absolutely essential. They can negotiate with your insurance company to potentially reduce the reimbursement amount, ensuring you keep more of your settlement. So this hidden world of subrogation and reimbursement is constantly churning beneath the surface of the no-fault system. It determines whether you get your deductible back, it influences the rates we all pay, and it can even take a slice of your personal injury settlement if you're not careful. It's a powerful reminder that even when a claim seems finished, the financial gears are still turning. But this raises the most important question of all for anyone who's been seriously hurt in an accident. When is no fault not enough? We've mentioned this idea of a threshold. What exactly is it? How severe do your injuries have to be before you can break free from the limitations of the no-fault system and demand full compensation for everything you've lost? That is the key that unlocks the door to a real lawsuit, And it's exactly what we're breaking down next. This threshold is the single most important, and frankly, the most frustrating part of the entire no-fault system. It's the invisible wall, the legal gatekeeper that determines whether you get to seek true justice, or if you're stuck with just the basics covered by your own PIP policy. Think of it as a line in the sand, drawn by politicians and insurance lobbyists. On one side, you're limited to your PIP benefits no matter who was at fault. On the other side, you're free to pursue the at-fault driver for every penny you deserve, for your pain, your suffering, your ruined quality of life. Crossing that line is everything. So how do you cross it? Well, states have created two main types of thresholds. The first is called a monetary threshold, and the second is a verbal threshold. Let's start with the monetary one because it's the easiest to understand and also the easiest to see the problems with. A monetary threshold is exactly what it sounds like. It's a specific dollar amount. Your medical bills and certain economic losses resulting from the accident must exceed this set amount before you're allowed to sue the at-fault driver. For example, a state might set its monetary threshold at $5,000. This means that until your doctors, chiropractors, and physical therapists have billed you for more than $5,000 worth of treatment, the courthouse doors are legally barred to you. You can't sue for pain and suffering. You can't sue for emotional distress. You are stuck in the no-fault box. It's like a twisted video game. You can't fight the final boss, the at-fault driver's insurance company, until you've collected enough medical bill coins. It doesn't matter if you're in agony every single day. It doesn't matter if you can't pick up your kids or enjoy your hobbies. The only thing the system cares about is that number at the bottom of your medical bills. Have you hit the magic number yet? No? Then you can't sue. And you can immediately see the problem here, right? It creates a perverse incentive. To get the justice you deserve, you almost have to hope your medical bills are high. It can encourage doctors to order more tests, more procedures, more physical therapy sessions, not just for your health, but to help you meet that arbitrary financial target. But what about the person who is genuinely tough? The person who has a high pain tolerance and tries to power through it, avoiding expensive treatments? The system punishes them. Imagine a construction worker, Mark. He gets rear-ended. His back is a mess. He has a herniated disc that causes shooting pain down his leg every single day. He can't work like he used to. He can't sleep through the night. His life is miserable. But he's a tough guy. He avoids the doctor as much as he can. And his medical bills only add up to $4,000. The state threshold is $5,000. Mark is out of luck. He can't sue the driver who did this to him for his constant pain, his lost overtime, or the fact that he can no longer go fishing with his son. The law says his injury isn't expensive enough to warrant a lawsuit. It's a system that measures suffering in dollars and cents, and if your suffering isn't costly enough, it's deemed insignificant. Because of these obvious flaws, most no-fault states have moved away from a purely monetary threshold and instead use what's called a verbal threshold. This is far more common, but it's also where the real legal battles are fought. A verbal threshold doesn't care about the cost of your medical bills. You could have $1 million in medical expenses and still not be able to sue if you don't meet the verbal threshold. That's because a verbal threshold defines the type of injury you must have. It's a list of words, a legal definition of serious. If your injury fits one of the descriptions on the list, you can sue. If it doesn't, you can't. Think of it like a VIP club with a very strict, very specific dress code. The bouncer doesn't care how rich you are, how high your medical bills are. He's just looking at what you're wearing, what kind of injury you have. A broken bone? Come on in. Significant disfigurement? Right this way. But a severe soft tissue injury like the chronic whiplash that gives you headaches every day? The bouncer might look you up and down and say, "Sorry, not on the list." So what's usually on this list? While it varies from state to state, the categories of serious injury typically include things like death, dismemberment, which means losing a limb, significant disfigurement, like severe scarring on your face, a fracture, which is just a fancy word for a broken bone, loss of a fetus, and then you get to the two categories where all the fights happen: permanent limitation of use of a body organ or member, and significant limitation of use of a body function or system. Those last two sound vague, don't they? That's because they are. And that ambiguity is where the insurance company lawyers live and breathe. What does permanent really mean? What counts as a significant limitation? Is a 20% reduction in your neck's range of motion significant? What if it's 30%? Is the constant pain from a herniated disc a significant limitation of a body function? You say yes. The insurance company for the at-fault driver will spend tens of thousands of dollars on their own doctors and lawyers to argue no. They'll say you're exaggerating. They'll say it's a pre-existing condition. They'll argue that your injury, while unfortunate, simply doesn't rise to the level of serious, as defined by the law. Let's go back to our examples. Imagine another person, Sarah. She was in an accident identical to Mark's, but instead of a herniated disc, she suffered a complex fracture in her wrist. It required surgery, pins, and plates. Her medical bills might actually be less than Mark's in the long run. But because a fracture is explicitly on that VIP list for the verbal threshold, there's no debate. The bouncer lets her right in. Sarah can now sue the at-fault driver not just for her medical bills, but for the pain of the surgery, the ugly scar on her arm, the months she couldn't type at her job, and the fact that she'll have arthritis in that wrist for the rest of her life. Mark, with his chronic debilitating back pain, is stuck with his PIP benefits. Sarah, with her broken bone, has the key to the courthouse. Same accident, two wildly different outcomes, all because of the legal definition of their injuries. This is the reality of the verbal threshold. The most common and most difficult injuries to deal with under this system are soft tissue injuries. Things like whiplash, muscle tears, and herniated discs. These injuries don't show up clearly on a standard X-ray like a broken bone does. They require more advanced imaging like an MRI. And even then, their severity can be a matter of medical opinion. This is the gray area where insurance companies will fight you tooth and nail. They will portray you as a faker, someone trying to game the system over a simple sore neck. They'll argue your pain isn't a significant limitation, because you can still walk, drive, and go to work, even if you're doing it all while gritting your teeth in agony. This is why meticulous documentation from your doctor is absolutely critical in a no-fault state. Your doctor needs to clearly state not just what your injury is, but how it limits you. They need to use the magic words, significant, permanent, and back them up with objective measurements and evidence. Without that, you're handing the insurance company the ammunition they need to deny your claim and keep you locked out of the courthouse. And to make it all even more complicated, every no-fault state has its own unique twist on these rules. Florida has a strict verbal threshold. New York has one too, but it also has a provision that if your economic losses like lost wages exceed a certain amount, that can also be a path to a lawsuit. And then you have states like New Jersey which give drivers a choice when they buy their policy. You can choose a limitation on lawsuit option, which is a verbal threshold for a cheaper premium. Or you can pay more for a no limitation on lawsuit option, which basically lets you buy your way out of the threshold entirely. So the threshold is the gate. It can be a dollar amount or a specific diagnosis. It's the legal hurdle you have to clear before you can demand full compensation for your human losses. Your pain, your suffering, your inability to live your life the way you did before someone else's carelessness changed everything. But what happens once you cross it? What happens when your doctor confirms you have a serious injury? Or your medical bills finally hit that magic number? Does your PIP coverage just stop? How does your own insurance company coordinate with the lawsuit you're now filing against the other driver? Getting through the gate is the first battle. But what awaits you on the other side is a whole new set of rules and strategies you need to understand. And that's where we're going next. Once you're through that gate, the entire landscape changes. You're no longer in the relatively straightforward world of your own no-fault policy. You've now entered the realm of what's called tort law. That's just the legal term for a civil wrong that causes someone else to suffer loss or harm, resulting in legal liability. You're not just making a claim anymore. You are officially suing another person. And this process is a marathon, not a sprint, governed by a strict set of rules. The first official move is your attorney filing what's known as a complaint. This isn't a letter of complaint to a manager. This is a formal legal document, filed with the court system, that lays out the entire foundation of your case. It will state who you are, who you're suing, the basic facts of the accident, when and where it happened, and most importantly, it will allege that the other driver was negligent, that their negligence caused your injuries, and that because of those injuries you are demanding financial compensation. Once this complaint is filed, a copy has to be legally delivered to the person you're suing. This is called service of process. You might have seen this in movies. A person walks up to someone, says, "You've been served," and hands them a stack of papers. That's pretty much how it works. And for the other driver, this is often a terrifying moment. But here's the critical thing to understand. From this point forward, you are almost never dealing with the other driver directly. The second they get those papers, they make one phone call. Not to their mom, not to their friend, but to their auto insurance company. And this is where the real battle begins. Because the insurance company has a legal duty to defend their client. They immediately assign a team of experienced defense attorneys to the case. So while your lawsuit is technically against John Doe, the other driver, your real opponent, is a multi-billion-dollar insurance corporation and its army of lawyers whose entire job, day in and day out, is to minimize the amount of money their company has to pay you. They aren't personal. They aren't emotional. They are strategic, and they are very, very good at what they do. Their first move is to file a response to your complaint, called an answer. In this document, they will typically deny almost everything. They'll deny their driver was at fault. They'll deny you were as injured as you claim. They'll deny you're entitled to the money you're asking for. This is standard procedure. It's the legal equivalent of clearing the board to start the game. And the first phase of that game is called discovery. This is the longest and, for many people, the most grueling part of a lawsuit. The purpose of discovery, in theory, is to allow both sides to gather all the relevant facts and evidence, so there are no surprises if the case goes to trial. In practice, it's an exhaustive deep dive into every corner of your life, both before and after the accident. The defense's goal is simple. Find anything and everything they can use to devalue your claim. Discovery happens in a few key ways. First, there are interrogatories. These are written questions that the other side's attorney sends to your attorney for you to answer. And you have to answer them in writing under oath. The penalties for lying are severe. These questions will cover everything. Your full name, address, date of birth. Your entire employment history for the last 10 years. Your income. A detailed description of how the accident happened. A list of every injury you claim to have suffered. A list of every single doctor, physical therapist, chiropractor, or hospital you have visited for your injuries. A list of every medical provider you've seen for any reason for the past 10 years. They want to know if you had a bad back 5 years ago, because they will argue that your current back pain is just a pre-existing condition. Next comes the request for production of documents. This is exactly what it sounds like. They demand you produce copies of documents. All of them. They'll want copies of your medical records and bills, your pay stubs and tax returns to verify your lost wage claim, photos of the accident scene, photos of your injuries, the repair bills for your car. They are building a complete file on you piece by piece. Your attorney will be doing the same thing to them, but for you, the injured party, the process feels far more invasive. After the written questions and documents comes the most intimidating part of discovery for most people, the deposition. A deposition is your sworn testimony, given out of court but under oath. You, your attorney, the opposing attorney, and a court reporter will all gather in a conference room. There is no judge. The other lawyer will then proceed to ask you questions for hours. They will ask about your childhood, your education, your job, your family, your hobbies. Then they will grill you on the accident. What time was it? What was the weather? What color was the traffic light? How fast were you going? Where were you looking? What did you do 1 second before impact? Then they'll move to your injuries. They will go through your entire medical history, from the moment of impact to the day of the deposition. What did you feel first? What did the paramedics say? What did the ER doctor do? What did your orthopedic surgeon say on your third visit? What pain medication are you taking? Does it have side effects? Can you lift a gallon of milk? Can you play with your kids? Can you sit through a movie? They will ask the same question in 5 different ways at different times to see if your story changes even slightly. The purpose of the deposition is twofold. First, they want to see what kind of a witness you will be in front of a jury. Are you credible? Are you likable? Do you get angry easily? Do you exaggerate? Second, and more importantly, they are locking you into your testimony. The court reporter is typing down every single word you say. That transcript can and will be used against you if your case ever goes to trial. If you say in a deposition that the pain in your neck is a 7 out of 10, and then a year later at trial you say it was a 9 out of 10, they will hold up that transcript and paint you as a liar to the jury over that tiny inconsistency. It is a high-stakes, high-pressure interrogation, but their investigation into your medical condition doesn't stop there. They have one more powerful tool in their arsenal. It's called an independent medical examination, or IME. That name is one of the most misleading phrases in the entire legal system. It is anything but independent. The insurance company will force you to be examined by a doctor that they choose and they pay for. These doctors are often retired or semi-retired physicians who make a very comfortable living performing these exams for insurance companies. They are not there to treat you. They are not there to help you. They are there to write a report for the insurance company. And in that report, they will often conclude that your injuries aren't as severe as you claim, or that you fully recovered, or that your problems are due to a pre-existing condition and have nothing to do with the car accident. This report becomes a key piece of evidence for the defense, a weapon they will use to argue that your claim is worth far less than you think. This entire discovery process, the questions, the documents, the deposition, the IME, can take months, sometimes even more than a year. It is a war of attrition. It's designed to be exhausting, invasive, and stressful. They are testing your resolve. They are hoping you'll get so tired of the process, so fed up with the endless scrutiny, that you'll be willing to accept a lowball offer just to make it all go away. They now have everything. Your complete medical history, your financial records, your sworn testimony about every detail of your life. They've had their doctor examine you. They have a mountain of information. So what do they do with it? They start running the numbers. They plug all this data into their sophisticated formulas to come up with a number, the exact dollar amount they believe your pain, your suffering, and your case is worth. And that number is almost guaranteed to be wildly different from the number you and your attorney have in mind. How they get to that number and how the fight over it begins is the heart of the entire lawsuit. So let's pull back the curtain on how an insurance adjuster, sitting in a cubicle hundreds of miles away, attempts to put a dollar value on your unique, personal agony. Feels impossible and frankly a little insulting. But for them it's just another Tuesday. They have systems, formulas, and increasingly artificial intelligence designed to turn your life-altering experience into a number on a spreadsheet. Historically, there have been two primary methods used to get a starting point for pain and suffering: the multiplier method and the per diem method. Understanding these is the key to understanding their first offer. The multiplier method is the most common. The logic is simple, at least on the surface. The adjuster takes the total amount of your hard, calculable economic damages, what lawyers call special damages. This includes every single medical bill, from the ambulance ride to physical therapy sessions, your lost wages from missing work, and any other out-of-pocket expenses you've incurred because of the accident. Let's say, for example, your medical bills and lost wages add up to $50,000. The adjuster then multiplies that number by a factor, usually between 1.5 and 5. A 1.5 multiplier would be for a case with minor injuries, a quick recovery, and very little disruption to your life. Think of a minor whiplash that resolves in a few weeks. In our example, 50,000 times 1.5 would be $75,000 for pain and suffering, leading to a total case value of $125,000 in their initial calculation. A multiplier of 5, on the other hand, is reserved for catastrophic, life-altering injuries. We're talking about permanent disfigurement, chronic debilitating pain, paralysis, or a traumatic brain injury. The kind of injury that fundamentally changes who you are and what you can do for the rest of your life. In that case, $50,000 in medicals could be multiplied by 5, resulting in $250,000 for pain and suffering, and a total value of $300,000. Everything else falls somewhere in between. A broken bone that requires surgery might get a 3. A herniated disc with ongoing pain might get a 4. But who decides? The adjuster. And right there you see the problem. It's completely subjective. What you and your doctor consider a serious injury deserving of a 4, the adjuster, looking to save their company money, might see as a moderate injury that only warrants a 2.5. This single subjective number is the first major battleground. The second, less common method is the per diem approach. Per diem is Latin for per day. With this method, a dollar amount is assigned to each day you suffer from your injuries, from the date of the accident until the day your doctor says you've reached maximum medical improvement, meaning you're as good as you're going to get. How do they pick the daily rate? Often, it's argued that a day of pain is worth at least what you would have earned at your job that day. So if you make $200 a day, the calculation would be $200 multiplied by the number of days you were in pain. If you suffered for 6 months or about 180 days, that would be $36,000 for pain and suffering. This method is easy to understand, but it falls apart with permanent injuries. How can you calculate a per-day amount for a lifetime of pain? Because of this, it's typically only used for shorter-term injuries. Now, you might be thinking, okay, so my lawyer will argue for a higher multiplier, and their adjuster will argue for a lower one. We'll meet in the middle. That's how it used to work. But that's not the world we live in anymore. Welcome to the age of the algorithm. For the last couple of decades, major insurance companies have been using sophisticated, proprietary software programs to evaluate injury claims. The most famous or perhaps infamous of these is called Colossus. Others have names like ClaimIQ or Mitchell. These programs are, in essence, massive data crunching machines. The insurance company feeds the software tens of thousands of data points from your case. They input the specific billing codes from your doctors, known as CPT codes. They input the specific diagnosis codes for your injuries, the ICD-10 codes. They input the type of treatment you received, the doctors you saw, the duration of your care, your age, and the location of the accident. The software then cross-references this information against a massive database of past claims. It looks for patterns. It sees your specific type of spinal injury, compares it to thousands of similar injuries, and analyzes what those cases settled for in the past. It doesn't see you. It doesn't see your kids you can no longer pick up. It doesn't see the sleepless nights or the fear you feel getting behind the wheel of a car. It sees data points and it spits out a settlement range. A cold, calculated, statistically derived range of what your pain is worth. And guess what? That range is the adjuster's Bible. They are often not allowed to make an offer that goes above the range suggested by the software without getting approval from multiple layers of management. The software has, in many ways, replaced the adjuster's own experience and discretion. Its goal is not fairness. Its goal is consistency and cost control for the insurance company. This is why the first offer you receive is almost always, without fail, shockingly low. It's what we call a lowball offer. It is the absolute bottom end of the software's calculated range. It's a test. They are testing your resolve. They are hoping you're desperate. They are hoping you don't have a lawyer. They're hoping you'll see a check for $15,000, think about the bills piling up, and just take it and go away, signing a release that forever bars you from seeking another penny. Millions of people do just that. But this is where your attorney earns their keep. This is where the real fight begins. A good personal injury lawyer understands the software's limitations. They know the algorithm can't quantify a human story. So, their job is to build a case that transcends the data points. They gather the evidence the software can't process. This starts with a formal demand letter. This isn't just a letter asking for money. It's a comprehensive legal document, often 50 to 100 pages long, that tells your story. It includes not just the medical bills and records, but a detailed narrative of the accident. It explains in painstaking detail how the injuries have affected your daily life. It talks about the hobbies you've had to give up, the promotions at work you've missed, the strain it's put on your marriage and your family. This demand package will be filled with exhibits, photographs of the car crash, photographs of your injuries, the bruising, the stitches, the cast, a copy of your personal pain journal, where you've been documenting your daily struggles, and most powerfully, impact statements from friends, family, and coworkers, a letter from your spouse describing the person you were before the accident and the person you are now, a statement from your boss about how your productivity has suffered, a note from your child's teacher about how you can no longer volunteer at school. This is the human element. This is the story. The goal is to present the insurance adjuster with a narrative so compelling, so well documented, and so full of human truth that they are forced to acknowledge the limitations of their own software. The attorney is giving the adjuster the ammunition they need to go to their supervisor and say, "Look, I know what Colossus says, but this case is different. This person's story is powerful. If we let this go in front of a jury, they will see a real person, not a collection of billing codes, and they will award them far more than our software is predicting." This is the counterpunch. The insurance company has made its opening move based on cold data. Your attorney has just responded with the full, undeniable weight of your human experience. The negotiation has now truly begun. The initial lowball offer is rejected, and a counter-demand, backed by this mountain of evidence, is made. Now the adjuster has a choice. Either significantly increase the offer to a fair number, or dig in their heels and prepare for a long, expensive fight. And this is where the real chess match begins. The adjuster, armed with the multi-billion-dollar company's resources and decades of institutional data, now has to reevaluate their entire strategy. Their initial goal was simple: close your file for the lowest possible amount, as quickly as possible. But the demand letter from a serious attorney changes the entire equation. It's no longer just a number on a screen. It's a credible threat. A threat of time, of expense, and most importantly, of uncertainty. The first thing the adjuster does is not pick up the phone and agree to the new number. No, The first thing they do is go on the attack, but quietly. They will reread every single page of your medical records, looking for a single word, a single note from a doctor, that they can twist to their advantage. Did you mention to your doctor that you had a sore back 5 years ago from helping a friend move? To the insurance company, that's not a minor, unrelated event. That is a pre-existing condition. They will argue that your current debilitating back pain isn't from their insured driver smashing into you at 40 miles an hour. It's just an aggravation of an old problem, and therefore they shouldn't have to pay for it. They will look at the timeline of your medical treatment with a microscope. Did you wait a week to see a doctor after the crash? They'll argue you couldn't have been that hurt. Is there a month-long gap where you didn't see a physical therapist? They'll claim you must have recovered during that time, and any treatment after that gap is unnecessary. These are not good faith arguments. They are calculated tactics designed to chip away at the value of your claim, to create doubt, to build a narrative that they can use as leverage. This phase is a war of attrition. The phone calls and emails will start. The adjuster might sound friendly, reasonable even. We've reviewed your attorney's demand, they'll say. And while we want to be fair, the number is just way outside of our evaluation. But look, I can probably get my supervisor to approve an extra $5,000 if we can settle this today. It's a classic tactic. They create a false sense of urgency and a phantom sense of progress. They want you to feel like you're winning something, getting more than the first offer, while in reality, you're still nowhere near the actual value of your claim. They are preying on your fatigue. They know you're hurt, you're tired of dealing with this, you're missing work, and you just want it to be over. They are dangling a slightly bigger carrot, hoping you're hungry enough to bite. When the attorney holds firm, the next phase begins. A formal process called discovery. This is where the insurance company officially flexes its legal muscle. They will send a list of written questions, called interrogatories, that you must answer under oath. They'll ask for every doctor you've seen in the last 10 years, every injury you've ever had, every prior claim you've ever made. They are on a fishing expedition, hoping to dredge up anything that makes you look less credible. But the real crucible, the moment that can make or break a case, is the deposition. This is where the insurance company's lawyers get to sit you down in a conference room, with a court reporter transcribing every single word, and question you for hours. Under oath. Their goal is not to find the truth. Let me repeat that. Their goal is not to find the truth. Their goal is to win. They will ask you the same question 5 different ways, hoping you contradict yourself. They will ask you about the minutiae of your day. You say your back hurts when you sit for more than 20 minutes, but you sat for 25 minutes on the drive here, didn't you? They will try to make you angry, to fluster you, to get you to say something you'll regret. They are testing you. They want to see what kind of witness you will be in front of a jury. Are you credible? Are you likable? Or do you come across as a winner, an exaggerator, a fraud? The entire future of your case can pivot on how you handle a few hours in that chair. This is immense pressure. And all this time, the insurance company is spending money. Lots of it. They're paying their in-house adjusters, their staff, and now they're paying expensive, high-powered defense attorneys by the hour. Every letter, every phone call, every motion filed with the court costs them money. This is the leverage your attorney is using against them. The initial lowball offer was an attempt to avoid these costs. But now they're in the thick of it. The longer the fight goes on, the more their cost of defense eats into their profits. And this brings us to a critical legal concept that insurance companies are terrified of: bad faith. See, an insurance company has a legal duty to act in good faith and deal fairly with people who have valid claims, even if it's the other driver's insurance. If they unreasonably deny, delay, or lowball a claim where the liability is clear and the damages are obvious, they can be sued not just for the value of the original claim, but for acting in bad faith. And bad faith damages can be astronomical, sometimes multiples of the original policy limit. It's a punishment. A jury can decide to punish the insurance company for its behavior. The threat of a potential bad faith claim hangs over every negotiation like a storm cloud. A seasoned attorney knows how to document every single lowball offer, every unreasonable delay, every misleading statement from the adjuster. They build a second case, a shadow case, right alongside the primary injury claim. It's a powerful card to play, a trump card that says, not only are you going to pay for my client's injuries, but if you keep playing these games, a jury might make you pay for how you played them. Faced with mounting legal fees, a well-documented case, a client who performs well in a deposition, and the looming threat of a bad faith claim, the insurance company's position starts to soften. The tone of the phone calls changes. The offers start to creep up, moving from insulting to merely inadequate. They are testing the waters, trying to find the point of least resistance. This is when most cases enter the final stage before a trial: mediation. Mediation is a formal settlement conference. You, your attorney, the insurance company's representative, and their attorney all gather, but in a neutral space. A third party, a neutral mediator, often a retired judge, is brought in to help broker a deal. The mediator's job isn't to decide who is right or wrong. Their job is to prevent a trial. The day starts with everyone in the same room. Your attorney will make a presentation, laying out the strongest points of your case, the horrific crash, the clear medical evidence, the impact on your life. The defense attorney will then present their side, highlighting any perceived weaknesses, the gap in treatment, the pre-existing condition, anything they can find. It's posturing. It's theater. Then you split into separate rooms, and the real horse trading begins. The mediator will spend the rest of the day walking back and forth between the two rooms, like a diplomat negotiating a treaty. They'll come into your room and say, they're not going to pay your full demand, but they've just increased their offer to $75,000. They feel your future medical costs are speculative. They will then go into the other room and say, they're not coming down to 75. They're holding firm. Their client is very sympathetic and will present well to a jury. You guys are running a real risk of a runaway verdict if this goes to trial. The mediator's job is to manage expectations and push both sides towards a middle ground. The hours drag on. Offers and counteroffers are passed back and forth. The numbers move slowly, sometimes by only a few $1,000s at a time. It is a grueling, emotionally draining process. You are sitting in a small, windowless room, making a decision that will impact the rest of your life, while a multi-billion-dollar corporation tries to save a fraction of its daily profits. The entire day boils down to one final moment of calculation and nerve. The mediator walks into your room, late in the afternoon, with what they call the insurance company's final offer. It's not everything you asked for. It never is. But it's a life-changing amount of money on the table, and you have a choice to make. Accept the certain, guaranteed settlement, or reject it and step into the complete uncertainty, the all-or-nothing gamble of a jury trial. And so you say no. You look your lawyer in the eye, take a deep breath, and you reject the offer. You bet on yourself. You bet on your story. You bet on the belief that a jury of your peers will see the truth and do the right thing. It's a terrifying and empowering moment. You've just turned down a life-altering sum of guaranteed money for the chance at something more, something you believe is fair. There's no turning back now. The gears of the justice system, which have been grinding slowly, now lurch forward with a final definitive purpose. You're going to trial. Everything up to this point, the depositions, the medical exams, the settlement conferences, it was all prelude. It was all behind the scenes in conference rooms and doctors' offices. The trial is the main event. It's public. It's formal. It's theater, but with the highest possible stakes. The first day you walk into a courtroom, the air in a courtroom is different. It's heavy with history and procedure. The high ceilings, the polished wood, the flags, the elevated bench where the judge sits like a king. It's all designed to intimidate, to impress upon you the gravity of what's happening. You see the defense attorney and their team at their table. They look confident, organized. They've done this 100 times. For you, it's the first and only time. And it all begins with a process that sounds strange. Voir dire. It's French for to speak the truth. This is jury selection. You might think they're trying to pick the 12 smartest or most qualified people in the room. That's not it at all. Jury selection is a process of deselection. Each lawyer is trying to get rid of the people they think will be biased against their case. A large group of citizens, the jury pool, is brought into the courtroom. The judge gives them a brief overview of the case. A car accident case involving personal injuries. Then the lawyers take over. Your lawyer stands up and starts asking questions. Have any of you ever been in a serious car accident? Do any of you have strong feelings about personal injury lawsuits? Does anyone here have a close friend or family member who works for an insurance company? They're listening not just to the answers but how people answer. The tone of voice, the body language. They're looking for a hint of bias. Then the defense attorney gets their turn. Their questions have a different angle. Does anyone believe that just because an accident happens, someone must be entitled to a large sum of money? Have you ever felt that a lawsuit you read about seemed frivolous? Do you have any training in medicine or healthcare? They're hunting for people who are naturally skeptical, people who think everyone's trying to game the system, people who might be reluctant to award significant damages for pain and suffering. Using a limited number of strikes, the lawyers remove potential jurors one by one until only the final group remains. These 12 strangers, or sometimes 6 depending on the state, are now the most important people in your life. They will decide your future. You look at their faces trying to read them. A retired teacher, a young IT professional, a construction worker, a stay-at-home mom. They know nothing about you except what they're about to hear in this room, and you have to convince them. Once the jury is sworn in, the trial begins with opening statements. This is each lawyer's chance to give the jury a roadmap, a preview of the story they're going to tell. Your lawyer goes first. They stand up, make eye contact with the jury, and they begin to paint a picture. They talk about the person you were before the crash. Your job, your hobbies, your family, your dreams. Then they describe the crash itself, the violent, terrifying moment that changed everything. They walk the jury through the pain, the surgeries, the grueling physical therapy, the sleepless nights, the financial strain, the loss of your ability to enjoy life. They don't argue the evidence yet. They just tell the story. They end by promising the jury that the evidence they present will prove every single word of it, and that they will ask the jury at the end to deliver a verdict that provides justice. Then the defense attorney stands up, and their story is completely different. They might start by saying, "My client is a good person who made a mistake, a moment of inattention. We are here today to take responsibility for that mistake. But, and this is where the pivot comes, we are not responsible for what the plaintiff is claiming." They will frame the crash not as a violent, life-altering event, but as a low-impact collision, a fender bender. They will plant seeds of doubt. They'll suggest your injuries aren't as bad as you say they are. They'll hint that maybe these medical problems were pre-existing. They'll imply that you're looking for a payday, a lottery ticket. Their job is to make you seem unreasonable, an exaggerator, maybe even a liar. The battle lines have been drawn. Now comes the heart of the trial, the presentation of evidence. Your lawyer calls their first witness, and that witness is you. Your heart is pounding as you walk to the witness stand. You swear an oath to tell the truth. And then for the next several hours your entire life is laid bare. Your lawyer starts with what's called direct examination. They ask you open-ended questions to let you tell your story in your own words. You talk about the crash. You describe the pain. You explain what your daily life is like now, the simple things you can no longer do. You try to make eye contact with the jury, to let them see the person behind the legal filings. It's emotional, it's draining, but it's your story. And then comes the cross-examination. Your lawyer sits down, and the defense attorney stands up and walks towards you. Their entire purpose is to destroy your credibility. They will not be gentle. They will ask leading, yes or no questions designed to box you in. They'll take tiny, insignificant inconsistencies between your deposition testimony from a year ago and what you just said on the stand and magnify them, trying to make it seem like you're changing your story. Mr. Smith, in your deposition on May 15th of last year, you said the light was yellow, but today you said it was red. Which is it? Were you lying then? Or are you lying now? They'll comb through your medical records. Isn't it true that you complained of back pain to your doctor 5 years before this accident? They might even bring up surveillance photos that their private investigator took, showing you carrying a bag of groceries, trying to prove you're not as injured as you claim. It is a brutal, humiliating experience. They are trying to take your pain, your trauma, and your truth, and twist it into a weapon to be used against you in front of 12 strangers. After you survive the stand, your lawyer builds the rest of your case brick by brick. They call your spouse or your best friend to the stand to talk about the changes they've seen in you. They call your doctor, who uses anatomical models and MRI films to explain the complex, permanent nature of your injuries to the jury. They call a vocational expert who testifies that you can no longer perform your old job, or any job like it. And finally, they call an economist who gets up with charts and graphs and calculates the exact dollar amount of your lost lifetime earnings, your future medical costs, putting a cold, hard number on your loss that can run into the millions. Then your lawyer rests their case, and the defense gets its turn. It's a mirror image designed to tear down everything you just built. They call their own doctors, experts who are paid to testify for insurance companies, who will say that they reviewed your records and your injury is just a simple sprain, that you should have been fully healed in 6 weeks. They might call an accident reconstructionist, an engineer who will testify that based on the crush damage to the vehicles, the impact was only 5 miles per hour and couldn't possibly have caused a serious spinal injury. It's a battle of experts, a war of competing narratives. Your truth versus their doubt. Days, maybe even a week or more, go by like this. The jury sits there, listening intently, their faces unreadable. You watch them trying to find a sign, a sympathetic nod, anything. But they are trained to remain neutral. You have no idea what they're thinking. You have no idea who they believe. Finally, the last witness steps down. The judge looks at the jury and says, "Both sides have now rested. The evidence is closed. All the testimony has been heard. All the exhibits have been entered. Two completely different versions of reality have been presented. And now the fate of your case, the validation of your pain, and the security of your future rests entirely in the hands of those 12 people. And you have absolutely no idea which way they are about to turn. The air in the courtroom is thick, heavy, a physical weight pressing down on your shoulders. Every sound is magnified. The distant cough from the gallery, the squeak of a lawyer's leather shoe, the low hum of the fluorescent lights. You can feel your own heartbeat in your ears, a frantic drum against the suffocating silence. The door to the jury room opens. 12 faces, unreadable, file back into the jury box, their eyes deliberately avoiding yours, avoiding everyone's. They take their seats with a solemnity that feels final. This is it. Years of pain, months of preparation, weeks of testimony. All of it has been distilled down to this single terrifying moment. The judge looks to the foreman. Has the jury reached a verdict? The foreman, a middle-aged woman with tired eyes, stands up. She holds a single piece of paper. Her hand is shaking just slightly. "Yes, Your Honor, we have." The court clerk takes the paper and walks it to the judge. The rustle of that one sheet of paper is the loudest sound you've ever heard. The judge reads it, his expression a perfect mask of neutrality. He hands it back to the clerk, who turns to face the courtroom. On the question of negligence, the clerk begins, her voice echoing in the stillness. "Do you find that the defendant was negligent and that their negligence was a direct cause of the plaintiff's injuries?" Time stops. You hold your breath. Your lawyer's hand rests on your arm. A small grounding pressure in a world that's about to spin off its axis. The foreman clears her throat. "Yes." A gasp ripples through your side of the courtroom. A wave of relief so powerful it almost buckles your knees washes over you. But it's not over. The next question is the one that truly matters. The one that will define your future. The clerk continues. "And what amount of damages do you award to the plaintiff for past and future medical expenses, lost wages, and pain and suffering?" The foreman looks down at the paper. She takes a breath. Feels like an eternity. She looks up, her eyes finally meeting yours for a fraction of a second. And she reads the number. Let's say, for the sake of this story, that the number is $100,000. $100,000. The words hang in the air. It's a validation. It's a victory. Tears stream down your face, not of pain but of pure, unadulterated relief. Your lawyer is clapping you on the back, whispering, "We did it." Your family in the gallery is weeping. It's over. You won. The nightmare is finally over. Or is it? A few weeks later, you're not in a courtroom. You're in your lawyer's conference room. The adrenaline has faded. The emotional high has subsided. Now it's just business. On the polished table between you is the settlement check from the defendant's insurance company. And next to it, a document called a closing statement. This is the final accounting. This is where you see what your victory is actually worth. Your lawyer starts with the big number at the top. $100,000. Still feels good to see it in print. But then he draws your attention to the next section, deductions. The first line item is attorney's fees. You remember signing the contingency fee agreement years ago. Felt like a formality then. It's not a formality now. The standard fee is 40%. 40% of the gross award. Your lawyer points to the number.
Minus $42,000.
Your victory is now $60,000. Still a lot of money. But a little of the shine has come off. The next line item is case expenses. You never really thought about this, but every single cost associated with building your case comes out of your settlement. The fee to file the lawsuit in the first place. The cost of hiring a court reporter for every deposition. The price of subpoenaing medical records from every doctor and hospital. The thousands of dollars paid to your own doctor to write a medical report. The tens of thousands of dollars paid to the expert witnesses, the accident reconstructionist, the orthopedic surgeon, the vocational expert, who testified on your behalf. These costs add up faster than you can imagine. Your lawyer shows you the total. Let's say it's $15,000. Your $60,000 victory is now $45,000. You're starting to feel a little sick. This isn't the triumphant moment you imagined, but it gets worse. The final section is liens and subrogation. This is the part no one ever tells you about. Remember how your health insurance paid for your surgery and physical therapy? They didn't do that out of the goodness of their heart. They did it with the legal right to be paid back if you ever recovered money from the person who caused the injury. It's called a lien. They want their money back. All of it. Let's say they paid out $20,000 in medical bills. That comes out of your settlement. Your $45,000 victory is now $25,000. And what about that PIP coverage? The personal injury protection from your own auto policy that paid the first $10,000 of your medical bills and lost wages right after the crash? The very coverage this series is all about? Your own insurance company also has a right to be reimbursed. They want their $10,000 back too. Your $25,000 victory is now $15,000. From a jury verdict of $100,000, after years of fighting, after bearing your soul in a courtroom, after enduring sleepless nights and endless stress, you walk away with $15,000. And here is the most brutal, soul-crushing part of it all. This entire process, this gladiatorial combat in a courtroom, this system that took years of your life, cost tens of thousands of dollars in expenses, and ultimately left you with a fraction of the award, was all designed to answer two simple questions. Who was at fault? And how much is your injury worth? This is the very system that no-fault insurance was invented to circumvent. In a pure no-fault state, the moment that accident happened, your own insurance policy, your PIP coverage, would have started paying your medical bills and a percentage of your lost wages. Immediately. Without a lawsuit. Without a deposition. Without having to prove the other driver was 100% to blame. It wouldn't have paid for your pain and suffering, that's true. But it would have provided a crucial, immediate safety net to keep you financially stable while you recovered. It replaces the agonizing uncertainty of a lawsuit with the simple certainty of coverage you paid for. The at-fault system forced you to roll the dice on a jury. It forced you to gamble years of your life for a payout that, even when you win, gets devoured by the very system promising to make you whole. You didn't just have to fight the other driver. You had to fight their insurance company, their lawyers, and then, at the very end, you had to pay back your own doctors, your own health insurer, and your own car insurance company. You became a collection agent for everyone else, and you were the last one to get paid. This is the fundamental trade-off. The at-fault system offers the possibility of a big payday for pain and suffering, but it comes at a monumental cost in time, stress, and money, with absolutely no guarantee of success. The no-fault system takes that lottery ticket off the table for most minor to moderate injuries, and in its place it gives you faster, more certain payment for your economic losses, your medical bills and lost wages. The goal wasn't to eliminate lawsuits entirely. In every no-fault state, if your injuries are severe enough, if they cross a certain threshold, either verbal or monetary, you still retain the right to step outside the no-fault system and sue the at-fault driver for pain and suffering. The system is designed to handle the vast majority of claims quickly and efficiently, saving the full-blown, expensive, and emotionally draining process of litigation for only the most serious and catastrophic injuries. So, if the at-fault system can be this punishing, this inefficient, this brutal of a gamble, and the no-fault system offers a more direct path to getting your most immediate bills paid, why isn't every state a no-fault state? Why would anyone choose the chaos of the courtroom over the certainty of coverage? The answer to that question reveals the deep philosophical divide in how we view personal responsibility in America. And it uncovers the powerful, entrenched interests that have fought for decades to shape these laws. Not for your benefit, but for theirs. At the heart of this battle are two colossal American industries: the insurance lobby and the trial lawyers. For them, no fault isn't a philosophical debate. It's a multi-billion-dollar war for survival, fought in the halls of state legislatures, and your insurance premium is the battlefield. Let's start with the insurance companies. For them, the traditional tort system, where you sue the at-fault driver, is a nightmare of unpredictability. Lawsuits are expensive, they take years, and a sympathetic jury could award a massive multi-million-dollar payout for pain and suffering. It's a variable they can't control. So they champion no fault as the solution. Their argument is simple and, on the surface, very appealing. They say, let's take the lawyers out of it. Let's eliminate costly lawsuits over minor accidents. Instead, your own insurance will pay your medical bills and lost wages immediately through PIP, regardless of who was at fault. Money gets to injured people faster, courts aren't clogged, and by cutting out the massive legal fees and exaggerated pain and suffering claims, we can lower premiums for everyone. They paint a picture of a streamlined, efficient system, and they portray trial lawyers as ambulance chasers who profit from misfortune and drive up costs for all of us. Then you have the other side, the trial lawyers. Their entire business model is built on the tort system, specifically on contingency fees, taking a percentage, usually 30 to 40%, of the money they win for their clients in a lawsuit. No faults restriction on the right to sue is a direct, existential threat to their livelihood. So they fight back, and they fight back hard. Their argument taps into a core American value: accountability. They say, why should a reckless driver who was texting and ran a red light get a free pass? Why should their insurance not be held responsible for the devastation they caused? They argue that no-fault insurance creates a system of moral hazard, where there's less financial incentive to drive safely. More importantly, they position themselves as the champions of the little guy, the only ones willing to take on giant, faceless insurance corporations. They'll point to the victim with a permanent, debilitating injury whose medical bills exceed their PIP limit. In a no-fault state, if that injury doesn't meet the specific, often strict, threshold to allow a lawsuit, that person can't sue the at-fault driver for the lifelong pain, the lost ability to play with their kids, the emotional trauma. The lawyers argue that no-fault strips away the rights of the most severely injured victims to be made whole. Also, insurance companies can pad their profits. And the truth is, both sides are right, and both sides are acting in their own self-interest. This is why the history of no-fault in America is a chaotic story of adoption, reform, and repeal. States like Colorado, Georgia, and Connecticut adopted no-fault systems in the 70s, only to repeal them decades later after intense lobbying and public dissatisfaction with rising premiums that never seemed to go down as promised. The insurance industry would claim this was because the laws were watered down by the trial lawyers, with thresholds that were too low, allowing too many lawsuits to still get through. The trial lawyers would claim it was proof the system was a failed experiment that only benefited insurers. The most dramatic example of this war is Michigan. For decades, Michigan had the purest, most extreme no-fault system in the country. It required every driver to buy a policy with unlimited, lifetime personal injury protection benefits. If you were catastrophically injured in a car accident, your auto insurance would pay for all of your medical care for the rest of your life. It was a remarkable safety net, the best in the world for auto accident victims. But it came at a staggering cost. Michigan's auto insurance premiums became by far the highest in the entire nation. The system created its own multi-billion-dollar industry of long-term care facilities. The financial pressure became unbearable. So, in 2019, after decades of failed attempts, a massive political battle erupted. The insurance lobby poured millions into a campaign promising drivers savings of hundreds, even thousands of dollars. They ran ads blaming frivolous lawsuits and out-of-control medical costs for the high rates. In response, the trial lawyers and healthcare providers poured millions into their own campaign. They ran heart-wrenching ads featuring severely injured accident victims, warning that the proposed reforms would throw them out of their wheelchairs and leave them without the care they needed to survive. It was a brutal, emotional, high-stakes war. In the end, the reformers won. The law was changed, and for the first time, Michigan drivers could choose different levels of PIP coverage, or even opt out entirely if they had other qualifying health insurance. The unlimited for life guarantee was gone. It was a seismic shift, a perfect illustration of the fundamental tension at the core of no fault. How do we balance providing care for the injured against the cost we are all forced to pay? So what does this all mean for you, the person just trying to drive to work without going bankrupt? It means that you are a pawn in a much larger game, and your only defense is knowledge. The single most important thing you can do is understand the system in your state and the choices you have on your own policy declaration page. First, know your state. Are you in a no-fault state, a choice state, or a traditional at-fault state? This is the foundation of your rights and responsibilities after an accident. Second, if you are in a no-fault state, scrutinize your personal injury protection, or PIP limit. The state minimum is almost never enough. In Florida, the mandatory PIP is just $10,000. A single trip to the emergency room with an MRI can wipe that out. Ask yourself, if you were seriously injured and couldn't work for 6 months, would $10,000 or $25,000 or even $50,000 be enough to cover your medical bills and lost income? In many states, you can and absolutely should buy higher PIP limits. Yes, it will cost more, but it could be the single most important financial decision you ever make. Third, if you are in an at-fault state, your focus needs to be on two different coverages: bodily injury liability and uninsured/underinsured motorist coverage. Bodily injury liability protects your assets, your house, your savings, if you cause an accident and someone else sues you. State minimums are dangerously low. Carrying only $25,000 in liability coverage in a world of six-figure medical bills is like bringing a squirt gun to a forest fire. And your uninsured motorist coverage is what protects you when the person who hits you has no insurance or not enough insurance. It is your shield against the irresponsibility of others. And finally, let's destroy a dangerous myth: the idea of full coverage. Full coverage is a marketing slogan, not an insurance term. It has no legal definition. People think it means they're covered for anything and everything. They are wrong. It usually just means a policy includes liability, collision, and comprehensive. It says nothing about the limits of that coverage. You can have full coverage with state minimum liability limits and be one serious accident away from total financial ruin. Do not be fooled by the slogan. Read the numbers on your policy. In states like Pennsylvania, New Jersey, and Kentucky, you are given a direct choice. You can choose limited tort or full tort. Choosing limited tort saves you a small amount on your premium, maybe 15%. In exchange, you voluntarily give up your right to sue for pain and suffering unless you suffer a serious injury, as defined by law. Full tort costs more, but it preserves your right to sue an at-fault driver for any injury. Is that small savings worth giving up such a critical right? That's a decision only you can make. But it's a decision you should make with your eyes wide open, understanding exactly what you are trading away. The complex, often contradictory system of auto insurance in America wasn't designed in a lab for maximum efficiency. It was forged in the fire of political compromise, shaped by decades of relentless lobbying from powerful groups with competing financial interests. The debate over fault and responsibility will continue to rage on in state capitals. But the responsibility for protecting yourself, your assets, and your family? That starts and ends with you. Check your policy. Understand your limits. Ask your agent the hard questions. Because in the chaotic world of auto insurance, the only person you can truly count on to have your back is a well-informed version of yourself.